Just a handful of weeks back, a collection of federal regulations quietly began arriving in mailboxes across the nation. And almost no one took the time to explain what any of it actually means if you're an older adult trying to figure out your situation. What you got instead was the usual background noise: inflation figures, stock market updates, political conversations. Nobody sat down and carefully explained what's genuinely shifting when it comes to your Social Security payment, your Medicare costs, or the assistance programs you might be depending on. And at that very same moment, a tax benefit that's already been written into law for a full year is just sitting there, largely uncollected, because a huge portion of the people who are eligible for it have no idea it even exists. Two completely separate developments. One shows up on your tax filing, the other lands in your mailbox, and taken together they represent a genuine shift in what's accessible to older Americans right now. As we move deeper into the second half of August, most platforms are only talking about one of these things, if they're discussing anything at all. I'm going to walk you through every single one of them. I'm not a professional financial advisor, but on this channel, each and every week I cover the real financial information that directly impacts seniors. The rules that have shifted, the protections you're already entitled to, and the actions that genuinely make a difference. This is exactly the kind of content I deliver week after week, and it's not something you'll want to miss. If that's the type of information you're looking for, go ahead and hit subscribe and turn on your notifications right now. All right, let's dive in. Let's begin with where all of this actually originated, because understanding that context explains quite a bit. During the summer of 2025, Congress passed a sweeping tax and budget package using a legislative process known as reconciliation. It barely cleared the Senate on a tie-breaking vote, passed through the House by a slim margin, and was signed into law on the 4th of July, 2025. Tucked inside that package were two items that carry enormous weight for older Americans: a brand new tax deduction designed specifically for seniors, and a complete restructuring of the work requirements tied to Medicaid and SNAP. Both are now in effect. Both are touching real lives at this very moment. And layered on top of that legislation is the annual Social Security and Medicare adjustment that took effect back in January, which is still working its way through monthly payments in ways many retirees haven't fully recognised yet. So let's break down the three biggest developments affecting seniors this August. Change number one: the $6,000 senior bonus deduction is still going unclaimed by a significant number of people. Here's the genuinely encouraging news, and it's worth understanding properly, rather than just catching the headline version. If you're 65 or older, you're eligible to claim an additional $6,000 deduction on top of your standard deduction for tax years 2025 through 2028. This is not a check being mailed directly to you. This is not a stimulus payment of any kind. It's a deduction, meaning it reduces the portion of your income that actually gets taxed. And for a meaningful number of retirees, that's enough to nearly eliminate federal taxes on Social Security income altogether. The full $6,000 is available to single filers, earning up to $75,000, or married couples filing jointly, earning up to $150,000. Above those thresholds, the deduction gradually phases out at 6% for every dollar beyond the limit, and disappears entirely somewhere around $175,000 for individuals and $250,000 for joint filers. Here's the part that most coverage still manages to leave out. This deduction delivers the greatest benefit to middle-income retirees. If your income is already modest enough that the standard deduction wipes out most of your tax liability. Anyway, this addition isn't going to change much for you, and if you're a higher earner, you may see very little benefit or none at all. Independent estimates suggest that roughly half of Americans aged 65 and older won't receive a meaningful financial benefit from this, purely based on where their income falls. It's also worth emphasizing that this deduction carries an expiration date unless Congress chooses to extend it. It goes away after the 2028 tax year. So if you fall within that middle income bracket, this is the window of opportunity, not something to push off until later. Make sure that whoever prepares your taxes, whether that's you personally, a family member, or a professional, actually knows to apply it. And confirm that your Social Security number is current and correctly recorded, since both spouses need one on file to claim it together. Change number two: your Social Security raise isn't quite as generous as the headline suggested, but there's genuine relief tucked into the details. Now let's talk about the number seniors actually care about most, the size of the monthly payment. Back in January, Social Security recipients received a 2.8% cost of living adjustment, pushing the average monthly retirement benefit above $2,700, representing an increase of roughly $56 per month. On the surface, that looks like a solid gain, better than the prior year's 2.5% bump. But at that exact same time, Medicare Part B premiums jumped from $185 a month to $222.90, representing nearly a 10% increase and one of the steepest premium hikes the program has seen in years. With the annual deductible climbing as well, and since most people have that premium pulled directly from their Social Security payment, the increase effectively eats straight into the COLA raise. For many retirees enrolled in both programs, the real net increase works out to closer to $38 a month rather than $56. There is a legal protection worth knowing about called the hold harmless provision. It prevents your Social Security check from actually declining year over year as a result of a Medicare premium increase. But it doesn't cover everybody. New retirees and higher earners who already pay more than the standard Part B premium aren't shielded by it. Here's the piece of genuinely good news buried underneath all of this. Medicare's drug price negotiation program is now delivering real savings in the real world. The first round of negotiated medications, covering common treatments for heart disease, diabetes, kidney disease, and psoriasis, saw price reductions averaging at least 50%, and federal estimates place the total savings to beneficiaries at approximately $1.5 billion this year alone. A second and larger round is already underway for 2027, covering 15 additional medications, including some of the most widely used weight loss drugs currently available. If your income has recently dropped, whether through retirement or some other major life change, you can actually contact the Social Security Administration and ask to have your Part B premium recalculated based on your current income rather than an older tax return. Most people never make that request, and most who do turn out to qualify for the adjustment. So here's something I want to point you toward: the benefits, discounts, and assistance programs that most seniors are eligible for, but never actually use. I've gathered them all in one organised location, sorted by state and by program type, so you don't have to spend hours digging through complicated government websites. It's quick, it's clear, and any senior can easily find exactly what applies to their specific situation. No matter which state you live in, there is very likely assistance sitting unclaimed that belongs to you. It's called the Senior Exemption Playbook, and it's waiting for you in the first pinned comment just below this video. One tap and you'll have everything you need in front of you. Now stay right here, because the last change is the one where a single overlooked application could translate into the biggest dollar amount on this entire list. A program that can completely eliminate an entire monthly bill. You're already paying right now, and almost no one who qualifies for it ever gets around to actually applying. Change number 3, new work requirements are rolling out for Medicaid and SNAP, and this is the change most likely to catch people completely off guard. This particular shift lines up almost exactly with where we are on the calendar right now, and it deserves the most careful attention of everything we've covered. The same 2025 legislation that established the senior deduction also rewrote the work requirements governing Medicaid and SNAP, the Supplemental Nutrition Assistance Program, still widely referred to as food stamps. The SNAP changes are already in effect. The age range defining what's called an able-bodied adult without dependents, the group subject to strict work requirement rules, has been expanded significantly. That requirement previously stopped applying once a person turned 55. Now it extends all the way to age 64, meaning adults within that range must work a minimum of 80 hours per month, take part in an approved training or community service program, or volunteer sufficient hours to satisfy that threshold, or face the risk of losing benefits after 3 months within any given 3-year period. Several existing exemptions have also been narrowed. The caregiver exemption previously applied if your youngest child was under 18. It now only applies if that child is 13 or younger. Exemptions still remain for adults between 55 and 64 who are pregnant, caring for a child aged 13 or younger, or dealing with a documented physical or mental health condition that creates a barrier to employment. Medicaid is the piece that deserves the closest monitoring right now. Federal guidance required state Medicaid agencies to send outreach communications to affected members between June 30th and August 31st of this year. That means if you or someone you know is currently enrolled in Medicaid, a letter, phone call, text message, or email explaining these new requirements may already be sitting in your mailbox or your inbox. Following a federal comment period, the core provisions officially took effect on July 31st, and states have until January 1st, 2027, to complete full implementation, though some are moving more quickly through the use of waivers. This matters most for people in their early 60s who depend on Medicaid for health coverage during the gap before Medicare eligibility begins, or who rely on SNAP to help manage grocery costs. For some individuals, missing this outreach could result in a real disruption to their coverage or benefits, even if only temporarily. Here's the overlooked benefit I referenced earlier. If you're on Medicare and living on a modest fixed income, there are Medicare Savings Programs administered through your state's Medicaid office that can actually pay your Part B premium on your behalf, and in certain cases your deductibles and co-payments as well. These programs go by names like QMBB, SLMBB, and QI. A surprisingly large share of eligible seniors never apply for them simply because they've never been told about them or automatically assume they wouldn't be eligible. If your Medicare premium happens to be the largest recurring expense being deducted from your Social Security payment each month, this is worth 10 minutes of your time to look into. So here's what's genuinely taking place for seniors during this August. The $6,000 senior deduction is real and currently active, but it delivers the most value to middle-income retirees, and it won't be available indefinitely. The Social Security COLA is also real, but rising Medicare premiums are quietly absorbing a significant portion of it, even as newly negotiated drug prices are beginning to return genuine savings on the other side of that equation. And new work requirements for Medicaid and SNAP are being rolled out right now, with outreach notices arriving through the end of this month, which makes this the single change most likely to slip past someone who isn't paying close attention. Here is exactly what you should do. 3 concrete steps. Step 1. Visit liheap.acf.gov to locate your state's LIHEAP administering agency and find the specific enrollment window opening date for your state in August. The federal website lists complete contact details and current eligibility guidelines for every state. Step 2. Gather your documents before you submit an application. You will need your Social Security card, a recent benefit award letter showing your current monthly income, your most recent utility bill, displaying your account number and service address, and a government-issued photo identification. If you reside in subsidised housing or currently receive SNAP food assistance, bring that documentation along as well, since it can help speed up the approval process. Step 3. If you're uncertain whether you qualify or need assistance completing the application, dial 211. That is the National Social Services Helpline, available in every single state, completely free of charge, and specifically trained to connect older adults with benefit programs including LIHEAP, SNAP, property tax relief, and additional utility assistance options. Make that call before August 15th. Do not wait until after the enrollment window opens to start collecting your paperwork. The applications that get approved the fastest are the ones that arrive fully complete on the very first day of the enrollment period. None of what we've covered today is about creating alarm, and none of it involves promises of surprise checks magically appearing out of nowhere. It's simply about understanding the actual rules so that you, or someone you care deeply about, doesn't miss something that genuinely matters.